Hello and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza, and viewers, that you know that this is the show where you get all your stock related queries answered by the experts who will connect with us shortly. But before that, let's have a look at what the markets are up to. So Cheryl, one big event is over. The markets, the reaction was almost flat, but the other event that we are watching out for is the expiry. And for now, the markets are near the day's highest point.
Absolutely, Shrishti, but a lot had to do with what happened overnight, especially in the global markets. You had the Federal Reserve who went ahead and actually hiked that interest rate by 25 basis points, saying that we've not done yet when it comes to fight against inflation. But as all were anticipating, most likely they will hit the pause button for a while. Come next Federal Reserve meeting. But what you can see on your screen is totally opposite of what the global handover was like. You have the Indian markets now trying to inch forward, building on some sort of gains, 0.3% uptick coming in for the benchmark indices as we speak. Let's take a look at what Nifty Bank is doing, because Nifty Bank also was kind of moving in tandem with the benchmark indices earlier in the day. And as you can see on your screen as well, Nifty Bank also trying to nudge forward towards the day's highest point as we speak, 49 points higher. Talking about the list of gainers on the screen today, you have Adani Enterprises, SBI Life, BPCL, Tata Steel among the top gainers, while on the flip side, on the losing end, you have Power Grid, IndusInd Bank, ICICI Bank, as well as Tata Consumers that are actually in a weaker footing as we speak. The breadth of the market for now is definitely in the favor of the advances. Talking about the sectoral indices and how the picture is looking like on that section, Realty Index is the top loser. 0.4% downtick coming for the Realty Index. FMCG Index is seeing a decline of about 0.2% as we speak. But on the flip side, there's the Metal Index, 1.5% or 1.2% uptick coming in for the Metal Index right now. So healthy gains coming from Metal Index. Broader markets outperforming the benchmark indices, add to that list, as well as PSU Bank. So that's the way how the market setup is looking like. Shrishti, the fact being that we are seeing a positive tick come in on our benchmarks.
Well, yes, absolutely. And one such space amongst them that is seen to be buzzing is the NBFC space. And on to the Buy Now, Sell Now lens today, we're going to be focusing on the NBFC space and zooming in on three particular counters that are in focus. Firstly, on your screen is Cholamandalam Investment hitting an all-time high level for itself. The other one is M&M Finance, very near to its life highs. But on the contrary, if we look at Aavas Financials, that stock is down about 3%. What's the news flow on all the three counters and why these counters are buzzing? Let's understand that from Vamakshi, who's joining us into the show right now. Very good morning, Vamakshi. Tell us what's the news flow.
Well, NBFCs like Cholamandalam Investment, M&M Financials and Aavas Financiers are in focus on the back of the Q4 numbers. Let's break down those numbers for you. Let's first look at the disbursements growth that has come in. Now for Cholamandalam as well as for M&M Financial Services, the disbursement growth is above 50%, while for Aavas it's a meager 17% in comparison. Apart from that, when we look at the AUM growth, that was aided by the strong growth that we did see in the disbursements. And for all three counters, that is for Cholamandalam, M&M Finance as well as Aavas Financiers, we're seeing a growth of over 20% come in. So healthy disbursements leading to healthy AUM growth. And not just that, we also see that the asset quality for all these counters has actually improved. The gross stage 3 has declined for most of these counters. For Cholamandalam, it has declined from 3.51% to 3.01%. For Aavas Financiers, we're also seeing a decline below the 1% mark as far as gross stage 3 is concerned, while for M&M Financials, gross stage 3 has improved to 4.5% from 5.9% that we did see on a sequential basis. Now, when we look at the company-specific highlights that came in this time around, for Cholamandalam Investment, it is the best ever disbursable correction as well as the profitability that we saw in the fourth quarter. The company has gained market share across the product segments, and their loan against property as well as the SME business are witnessing some strong growth. Now, as far as Aavas Financiers is concerned, AUM growth was driven by higher disbursements and lower runoffs. Apart from that, one important factor driving the stock movement today is that the MD of the company, Mr. Sushil Kumar Agarwal, has resigned from his position, and this resignation is considered negative as he was instrumental in designing the business framework for Aavas Financiers since inception. And lastly, for M&M Financials, we did see that the management has targeted to grow the AUM, in fact double the AUM in the next 3 years, and NIM is expected to sustain around 7.5%, and they're also gaining market share across products. So largely those were all the important Q4 highlights from the NBFC space, and that is the reason why this space is in focus.
All right, so those are the finer details coming in for the NBFC space, and especially the numbers that they reported in the quarter gone by. But what's the prospect ahead going in for these names, especially Chola, M&M Finance as well as Aavas Financiers? Let's bring on board our experts for today. We have Kunal Bothra as well as Sharmila Joshi joining us on the show. Very good morning to both of you. Good morning, Kunal, as well as Sharmila. Thank you so much for joining us on ET Now. And Sharmila, let me come first to you. NBFCs, a lot of them have reported their numbers, some good numbers coming in for these counters. Also some management rejig as well. How do you see this entire space in the light of the recent developments?
So yes, I think coming space entirely, that I think is beginning to look good and attracting investors largely because of the fact that RBI somewhere signaled that we could be done with interest rate hikes for now, and that has sort of signaled some sort of a rally of buying across the NBFC space. And coming to these three names specifically, I think obviously Chola is the standout number, but there I think the valuations are fairly expensive, so that may not go up in a hurry. Then we have Aavas Financials. I think the sector view is good in terms of how they are poised within the real estate lending space and the geographies they're targeting, etc. But the numbers were indifferent, and of course I think there will be some amount of the MD resigning is a bit of a dampener. So there my view would be neutral. So very honestly, actually, if you ask me between the three stocks that you discussed, probably my favorite would be M&M Financials, because they've climbed that wall of worry that they had because of the regulatory concerns that were raised a couple of quarters back, and now delivering this kind of a number. But yes, I think overall the positive sentiment should stay with the NBFC space.
Okay, so amongst the three, M&M Financials is the pick coming in from Sharmila. But Kunal, coming to you, purely on the price action basis, if we see, then Aavas Finances as well as Aavas Finances is definitely weak in today's trading session. But other than that, M&M Finance as well as Cholamandalam very near to its all-time high levels. For Cholamandalam, it is indeed an all-time high level. So how do you see all of these three counters onto the charts, and which one will be your bet?
Good morning, first of all. I would largely agree that M&M Finance seems to be one of the stronger names from the pack. But then, there are so many options within the entire NBFC pack as such. So, whether you go back to the traditional, Bajaj Finances of the world, or whether you look at the mid-cap names, or not the mid-cap, but the tier to large-cap names like of Chola Finance, etc. These stocks have been looking exceptional on the charts. In fact, over the last 1 or 2 years, the kind of returns these stocks have clocked have been quite, strong for themselves. So I think it all depends now in terms of the market cap weighted. I would believe that M&M Finance looks attractive because of the a bit more high beta nature of the stock price, confirming a breakout about the 275 odd mark. Chola Finance is something which looks attractive on the charts, but I think maybe a buy and dip strategy could be something which could be adopted over here. Most of the other names, the likes of Shriram Finance, etc., are the ones which are looking attractive. I would not be looking to recommend or buy Aavas Financial because of the fact that there's so much of negative news flow which is flowing around the stock price. It is always better to wait out for a point when the news flow abates and the prices get into a stable recovery.
Okay, so M&M Financials is the consensus bet coming in from our experts. But with this, viewers, it's time to slip into a short break, but don't go anywhere. As we come right back, it's time to take all your stock-related queries. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's take the cognizance of the flashes on the bottom of the screen. Remember, we all know that the Go Air had filed a plea under Section 10 of IBC before the NCLT, and that case is being taken up right now. The NCLT is hearing the case, and what Go Air is saying in the statements that we're getting from the company at the NCLT, one is they're saying that there's scope for the company to be revived. They're requesting that interim moratorium should be granted to the airline. They're also requesting the NCLT to issue directions to the vendors or even the lessors from taking any action. Also, they are saying that the lessors are looking to freeze the account of the airline. Along with that, what Go Air is urging the NCLT is to appoint an IRP for the turnaround of the airline. They do admit the fact that the airline is going through a financial crunch, and also they are also admitting to the fact that there is scope for the company to be revived. Remember, yesterday we spoke also with the Go Air CEO exactly on these lines, saying that the petition before the NCLT was not on bankruptcy, but instead in order for them to be helped to revive the company, and that's exactly what Go Air is telling the NCLT, where the hearing has begun. They've also said that they have more than 7,000 employees that are working in the airline, and indirect employment is more than 10,000. They are requesting the NCLT to appoint an IRP for the turnaround of airline, and they're admitting that the airline is going through a financial crunch, requesting for interim moratorium to be granted to the airline. Remember that Go Air has filed a petition before the NCLT under the Section 10 of IBC. We will try and connect with a reporter who's tracking this case very closely. But for now, these are the commentaries that you're getting in initial updates that you're getting in from the hearing that is taking place in the NCLT, where Go Air lawyer is telling the NCLT that the airline is going through financial crunch, and they are requesting the NCLT to issue directions to vendors or lessors from taking any action. So this is a crucial development that we'll be watching out for through the course of the day, and we will get you all the updates on that particular front. But let's get back to discussing stocks and markets with our experts. And as you know, we have Kunal as well as Sharmila joining us on the show today. And Sharmila, before I start taking all the viewer query, let me ask you, what should viewers or rather retail investors do to make sure that the wealth is protected? We are way above the 18,100 levels. Hopefully, we are able to sustain that.
Yes, it does look like it will sustain this level. Their confidence is sort of building at this level. My only advice would be that whichever stock that you want to invest in, wait for the quarter numbers, because we are in the middle of earnings season and there have been a few nasty surprises. IT earnings have not been up to point. Mid-cap IT has delivered better. So take a little call on what is the sector that you want to invest in, what is the trend in terms of numbers, where valuations are, and then make an investment. I think there are many interesting investing ideas out there. But just be careful, since we are in the earnings season and you don't want to get caught on the wrong side of a bad, something going wrong with the earnings or the outlook of a company. So just wait for that and then make your call.
Okay, so, that's the advice coming in for all our retail investors. But with this, let's kickstart taking all your stock related queries. Viewers, do note that we are live. You can connect with us on a WhatsApp number that is flashing right on your screen, as well as you can also write to us on Facebook as well as Twitter, mentioning your stock name and the buy price, as well as your name, so that we can guide you better. Let's start, and the first question that I have is coming from Balan. And Sharmila, let me take it up from you. He's holding two counters. Firstly is Cineline. That's a small cap company. I'm not sure whether you track this one or not, but he entered at a price of 98, and the other one is Orient Hotels. He entered at a price of 80 rupees. Wants to know the outlook on both of these counters for the next 6 to 12 months.
I think Cineline, the outlook seems to be slightly negative. Of course, I think once again wait for numbers, because last quarter I think they did show an improvement in numbers. So wait for quarter numbers and then take a call. What is the other stock? Orient Hotels. I think Orient Hotels, my outlook would be better, because honestly we are seeing a good run from hotel stocks as a whole. India Hotels has delivered best ever numbers, and their outlook is very strong. So I think that could be the case. It's safe to conclude, I think, that unless you're doing something terribly wrong, that could be the trend for most of the hotel stocks, because we do know that tourism has picked up. Here I'm a little bit more confident about holding for the long term. Where Cine Line is concerned, I think wait for the numbers and then take a call.
All right. The next one that I have is coming in from Deepak. He's writing to us from Kerala. This one is for you, Kunal. He wants to know whether it's right time to buy Hindalco and also what are the levels that he should watch out for on this particular counter.
So current levels of 445 is a good level to buy Hindalco. If you're looking at it from a short-term angle, then I think 480 could be a modest target, which you can look at it from, say, the next 3 months, 4 months, 3 to 4 weeks kind of a perspective. And for this trade, you can keep a stop loss, which should be around 430 mark.
Okay, Sharmila, coming to you for the next one. Kaushik Mitra wants to know, is this a right time to enter into two counters? Firstly, it's HUDCO and the other one is NBCC. His investment horizon is for the next 1 year.
So let's talk of HUDCO first, where the stock is, and I don't think quarter numbers are out yet. Let me take a quick look at that. No, quarter numbers are not out yet, and last quarter numbers were sort of flattish. So I think that here I would be neutral. What was the other stock?
What's your outlook on this particular counter?
NBCC was the other stock.
Yes.
Yeah, so I think NBCC I'm a little more confident again about, because the order wins etc. have been good. So I think yes, here you could stay invested, but HUDCO perhaps you should take.
Okay, the next one is coming in from Ramamurthy, writing to us from Bahrain. This one is for you, Kunal. He's saying that he's bought 50 shares of Dixon Tech at a price of around 4,300 rupees per share. Also, he has some other names like Brightcom Group also in his portfolio, which is making heavy loss. He wants to know what should he do? Should he continue to wait for in both of these counters or exit?
Brightcom Group, I think you can look to exit. I frankly don't track the stock, but looking at the charts from a long-term basis, doesn't look attractive. It's completely rather fully high beta stock. I would recommend that as an exit. For Dixon Tech, it could be interesting because the stock after a battering, I think in the month of Jan 2023, if I'm not wrong, has gone through a bit of a sideways range. Now, this means that the selling pressure is not yet over for Dixon Tech. There could be one more round of selling pressure, which the stock may probably get drawn into. So maybe closer to 2,700, 750 mark is where you can look to start averaging out your holdings on Dixon.
Okay, moving on to the next question, and Sharmila, coming to you for this one. Kiran Chopra is a senior citizen from Lucknow and wants your advice, wherein she is planning to invest 40 lakhs for the next 3 to 5 years in some of the large cap as well as mid cap companies. Wants your recommendation, your top bets, and where she can put her all her money. So, what will be your advice?
So I think you take a couple of things into account. First of all, the amount that she wants to invest, then that she's a senior citizen, and that the time horizon you're looking at is 2 to 3 years. So my first advice would be to not entirely invest the 40 lakhs together. It is always better to invest in a staggered manner, especially if you're investing for the longer term, because markets over the last 1 or 2 years have been very range bound, and things are a little bit globally been all over the place. So it's just better to invest in a staggered manner. Coming to the stocks, I think it would be a good idea to have a basket of stocks split between large cap and mid cap, because mid cap sometimes do tend to give you better returns. Coming to some direct names, I think HDFC Bank is a name that should be there, because they are going through that merger process, and I think in 2 to 3 years you should get benefit of that. So that should be one stock. There should be one name from the IT. HCL Tech is my preferred stock, so that is something that you could look at. You could also look at some plays from the mid cap. There I like a Persistent, I like a Tata Elxsi at this price, I like Zensar at this price. So these could be some names. You could probably include one of these. Then you need to have, I think, some pharma names. There again, probably mix it up a little bit. And then I think, keep some money aside for some themes that are doing well at any given point in time, and those could vary. So keep your sort of lookout for that, but sort of try to build your portfolio around good large cap names and mid cap.
Okay, this one's coming from Indu Kunal. This one is for you. She's asking if Deepak Nitrite and Phenotex Chemicals are looking good for positional trade. Also, what should be the stop loss for these two? And if they aren't good, then please suggest alternatives.
Well, Phenotex Chemical is something which I don't track, so I'll skip that. Deepak Nitrite, on the other hand, the stock is getting into a recovery phase. So I think after 4 months of correction or sideways consolidation, the stock has managed to break out. I think the breakout was around 1900 mark for Deepak Nitrate. So the chart looks attractive. The stock has come out of a good consolidation. We can probably keep maybe the previous month high as a stop loss. I think that's around 1888 mark for if you're in from a short term in trading view. But if you're in from a positional view, then maybe 1830 could be a good stop loss for the trade. And on the upside, you can look out for targets of 2020 to 200. That could be a potential target for Deepak Nitrite on the say medium term.
Moving on, the next question, Sharmila, is coming from Ghosh Dada, and he's holding 2,500 shares of Bikaji Foods from a price of 350 rupees. Sitting at a mild profits right now, wants to know, is this a good time to buy more of this counter and average out some of his buying, or rather you would suggest to book out profits from this one?
I'm sorry, I missed the that he bought at.
350 rupees.
Okay, so it's a little bit more than that. But overall, what I feel is that this is a new listing. Also, in terms of the business that they are in, that is something that I'm positive on. So I don't think that you need to average at this price, but definitely I think continue to hold what you have.
Okay, this one is coming from Ajay. He's writing to us from Hyderabad. RVNL, can he look to enter this particular counter right now, or do you foresee some reversal in this particular counter, Kunal? Week after week, day after day, you have RVNL that's soaring in trade, but today has been pretty volatile in trading session. What should be the call?
I think this is one advice which I think I'll give it to everyone, because there's always a fancy to try and buy stocks which are rising exponentially. But then what happens is traders, they generally tend to buy at the fag end of a price rally, and then they are left out holding the stock, expecting a similar kind of a rally for such kind of names. Now go back to the history for the charts for RVNL, and over the last 2 years there have been two such instances where the stock had risen up, I think 40%, 50% in a matter of maybe 2 weeks or 1 month approximately. But then what followed after that was almost 8-9 months of consolidation, price correction into these names. And that tests the patience for all of these investors who tend to get into these stocks at a extrapolative move. So I would suggest to wait out for a point where these stocks remain into a consolidation, they go into a correction. Buying RVNL at current levels is not something which I would advise because of the completely skewed risk reward. Wait out for a correction, at least maybe till 100, 105 odd levels. That's where you can look to start buying the stock, not at current levels.
All right, and that's the take coming in on RVNL and how you should actually think about trading in such counters. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of your stock-related queries, so don't go anywhere.
Welcome back to Buy Now, Sell Now, show where you get all your stock-related queries answered by the experts. And continuing the same, Kunal, coming to you for the next one. The question is from Sumana Das from Darjeeling, and she wants your advice on two counters. Firstly is Paras Defense, and the other one is Solar Industries. Wants to know, is this a good time to enter both of these counters with a short to medium-term outlook?
Yeah, I'm not sure what's the time horizon and what's the entire portfolio construct for the viewer. But I think out of these two names, in fact, both of the names are a tad bit illiquid for themselves. Paras Defense, even though it comes from a very good space as such, but surprisingly the stock has been an underperformer. It's just, I think recently the stock has started to get into some bit of recovery phase for itself. But again, not a major attractive charts for the stock price. I would suggest that it's better that you shift towards some quality mid-cap or large-cap names at this point of time, rather than both of these stocks, Solar as well as Paras Defense. So I would avoid recommending these names. If possible, a few of the alternatives which I would recommend, maybe look out for IDFC First Bank as better bets. AB Capital is something which I've been recommending consistently. Vector Foods is something which I would continue to be bullish on. So these are the few alternatives which I would suggest.
Okay, but Sharmila, I was just curious to know that given the fact that a lot of these defense counters are already buzzing at this point in time, given the underperformance by Paras Defense, how do you look at this particular counter on the fundamental basis?
Well, specifically about Paras Defense, I'm not so positive on the stock. But overall, I think I'm quite positive on defense as a trade. My preference would be more to a stock like an HAL or I think even a BEL at current prices than Paras Defense.
Of our analysts are not recommending for a fresh buy and suggesting alternatives. But moving on to the next question, Sharmila, coming to you for the next one. Rajesh Maheshwari from Singapore has 25 shares of Siemens from a price of 2,350 rupees. Wants to know, is this a good time to book out profits out of this given the recent run up in the counter? And the other advice he's seeking is this a good time to for a fresh entry in ABB India?
So I think both stocks look good to me at this point in time. ABB I think just declared sort of surprisingly there was a surprise in a positive sense for the numbers and the margins. Both stocks are I think trading at probably their all-time highs. But I think what you sort of need to remember is that for the longest time we didn't really have much happening in capital goods as a space, and it's only recently that we've begun to see some moves. While earlier we were talking of sectors which could be in focus and that you need to have investment in those sectors, and I think this is one of those sectors. So whether it's been a BHEL or a ABB or a Siemens or I think a whole host of stocks, I think if you go through the list, you will see that capital goods as a space has been doing very well and they do seem to be getting the orders. So I think you really need to stay invested in Siemens and probably ABB. As a fresh buy, I wouldn't recommend because I think the valuations are now on the higher side. But stay invested in the Siemens that you have.
Moving on to the next question, Kunal, coming to you for this one. Gopal Rao has bought 200 shares of Godfrey Philip from a price of 1,700, near to the current market price. Wants to know the short-term outlook on this one. He mentioned 1 to 2, but 1 to 2, what is a bit confusing. So I'm assuming it's for the next 1 to 2 months outlook that he is looking forward to. What's your advice?
So decent chart. The stock holding up to its major support point. I think 1650, 1600 is a major support point for Godfrey Phillips, at least on the charts. Since October, November 2022, the stock has been holding on to this major support point. So the risk what is attractive. It's good that you not bought at the higher end of the price trends for Godfrey Phillips at maybe 2000 levels or closer to those kind of zone. Risk reward is attractive. I would suggest that you can hold on to the stock, assuming for the next 1 or 2 months, if momentum comes back again, on Godfrey Phillips, ideally the stock could probably come back towards 1850, 1880 mark. That could be a potential target range which you can keep for the stock.
Once again, the next question is for you. Sanjay wants your outlook on Indigo at this point in time. Would you recommend a fresh buy in this counter? Because given the so much of news flow going for the airline industry after the Go First insolvency, we have seen a good uptick. But after that, is that still a buy for this company?
Even yesterday I was flagging off that buying stocks on back of such kind of news flow may not be a great strategy, and especially after the stock opens with a gap up and there's some kind of selling from an intraday high perspective. So today the stock has dipped back, I think 1.5% if I'm not wrong. My sense is that wait out for maybe one more round of correction for Interglobe Aviation. It's a stock which tends to get into those odd corrective phases whenever there is lack of news flow, no event happening or surrounding the stock price. And that's the best time to actually buy the stock. Maybe at 2000, 2050 levels is a better level to buy Interglobe Aviation rather than current zone.
Okay, moving on to the next question. Sharmila, the question is from Padma and she bought two counters. Firstly is GMR Infra and the other one is NHPC. Both entered at a level of 40 rupees. Wants to know, is that a hold at this point in time or rather she should make a shift to any other names?
By GMR Infra, do you mean GMR Airports? I think it's been renamed, right?
Yes, I guess so.
Yes, there I think she can to hold. And which was the other stock?
Continue, Sharmila.
I'm sorry, I didn't get the name.
Okay, the other one is NHPC, entered at levels of 40 rupees.
Okay, so I'm not a great fan of NHPC. Here, I would recommend an exit. Perhaps you could invest that money in GMR Airports. I think that has a better chance of doing well going ahead. So exit for NHPC, hold for GMR Airports.
All right, this one is coming in from Ravi. He's writing to us from Hyderabad. This one is for you, Kunal. He wants to know about Varun Beverages, 100 shares at a price of 14-15 rupees per share, BEL 500 shares at a price of around 100 rupees per share. He's making minute gains in both of these counters, but what sort of a target should he look at for both of them for the near term?
So for Varun Beverages, you can look out for targets of 1465, 1470. That's where the supply or the resistance tends to come back into the stock price. On the downside, you may keep a stop loss of 1400 or maybe few points below the 1400 mark. For BEL, on the other hand, I think from a near-term play, because most of the defense names are making a very strong comeback, you can keep a potential target of 112, 113 for BEL. But my only concern is because I was actually looking at the charts for the CPSE index, and the CPSE index is actually getting into an overbought territory. So you may see some bit of correction or cool off happening into the entire index. Maybe BEL could also get into that round of correction. So keep your stop losses as well as targets very nimble-footed. 112 as a potential target for BEL from a short-term play.
Okay, moving on, and Sharmila, this question is specifically for you from Krish, and he invested in Triveni Turbines, 50 shares from a price of 300 rupees. And given the recent run-up in this particular counter in the past 6 months, it's already up 25%. Wants to know what's your outlook on this one, and he's still looking to add more in a staggered manner. So what's your outlook on the same as well?
Yes, I think yes to both. Stay invested, and perhaps you could look to add as well. My only request would be that wait for numbers and then sort of add more. But looking at the way the numbers were and looking at what kind of overall increased activity we are seeing in the sugar space, and the fact that they supply machinery, etc., to that part of to sugar companies. I think it makes perfect sense to stay invested in Triveni Turbine and perhaps add more also. But I think try and add on dips, or when as I'm saying, wait for quarter numbers and then for dips, if any.
Okay, this one is coming from Hemant, and he wants a fundamental view on Signity Technologies as well as Supriya Life Sciences for the coming 4 to 5 years. Do you track either of these counters or both of the counters by any chance, Sharmila?
No, I'm sorry, I don't have that.
Okay, for the near term, Kunal, any trend on the charts are you spotting for these counters?
Not really, even I don't track these names.
All right.
Okay, moving on, and Kunal, coming to you for the next one. On your recommendation, S. Gopalakrishnan bought Astra Microwave 100 shares from a price of 314 rupees, sitting at a profit right now. But what's the short to medium term outlook and advise onto the profits that he's already sitting on?
See, I think I remember this was a call I think I had initiated 2 days back, or maybe yesterday morning or 2 days back. 330 was the target which I had highlighted for the stock price. And the stop losses I think were closer to 300 odd levels. Now what you can do is, since the stock has moved up higher by 3-4 percentage points, you can trade your stop losses to 310 for Astra Micro. Keep on riding the trends on the upside. 330 or just closer to that 330 mark is where you can look to book out profits.
Kunal, Pratiksha from Muscat is asking about L&T Finance as well as RCF. She's already holding both of these counters at the current market price that they are trading at currently. Wants to know whether it makes sense to hold these counters for the short term. Also, what's the best price that she can expect for them on the charts?
Oh, I think L&T Finance, you should definitely look to hold on from long-term play. I think the stock has just started to get into that, getting towards a breakout on the long-term charts. So it's a matter of patience as well as a matter of time for L&T Finance to get to that, 3-digit mark and potentially scale much higher from those levels. I am extremely optimistic on the longer-term prospects. And as I said, it could be just a matter of time when the stock breaks past about the previous instances. RCF, on the other hand, I think could probably be more of a trading bet. I think we highlighted RCF many a times ago in the last many months that closer to 100, 110 is a great support point for RCF. And that's where I think you can look to accumulate or look to add. So I would still maintain the stance for RCF that 100, 110 is a range where you can look to buy. And on the upside, 125 to 130 could be a potential near-term target range for RCF as well.
Okay, Sharmila, the next question is on EIL, the stock which was up 17% yesterday. Kiran Bedi bought 3,200 shares from a price of 78 rupees. Wants to know the outlook for the next 3 to 6 months.
EIL is Engineers India, is it?
Engineers India.
Okay. I think that I would think that it makes more sense to hold on to these stocks. I'm not terribly positive on the stock, but I think that from current levels, you should probably expect levels of about 105, 108. So with keeping that in mind, I think you can stay invested.
All right, this one is coming from Denny. He's writing to us all the way from UK. Kunal, this one is for you. Infosys call option 1260 at 29. He has 2 lots for May expiry. He wants to know what should he do with this particular counter as well as the IT sector as a whole.
Well, as of now, we can hold on to the stock, hold on to the option because I think most of these IT stocks are getting into a mild recovery phase. Now, it's very, very difficult to try and categorize how the recovery could pan out. For some of the stocks, the recovery could be more stronger. For some of the names, the recovery could be far more feeble. So I think that we'll maybe come to know maybe in the next couple of weeks. The reason why I would suggest to hold on Infosys because the stock is trying to enter into the gap which it had created post results. So maybe a scale up of another 20-25 points could happen for the stock price. Closer to 1,300 levels is where I believe that you can look to book out your option trades.
Okay, so that's the advice on the IT measure. But for this, viewers, it's once again time to slip into a short break. But don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now Sell Now on ET Now, and let me continue with all the queries. This one is from Anant Nayak. He's writing to us from Bangalore. 100 shares of Arvind Limited bought at 92 rupees per share. Whether he should sell or continue to hold on to this counter. Let me take this question to you, Sharmila. Arvind Limited, how does this one look to you fundamentally? And if someone is already holding on to it, what should the strategy be?
Oh, well, I'm not in favor of really holding on to the stock. I personally think that their Arvind Smart businesses or some other completely different sort of business would be better to be invested in. So I would really recommend to sell.
Okay, moving on. And Kunal, Lakshmi wants to know, is this a good time to enter Finolex Cable? What's your outlook on this one?
I think Finolex Cables seems to have done reasonably well in the last 3-4 months, recovered to I think 900 levels where it's currently trading. If I'm not wrong, it's also perched at a fresh life high. Buying the stock at current levels may be a good idea, but then I think buying on dips could be a much more better strategy for the stock price. So you can start at current levels of 900 where the stock is trading right now, and then say dips of 50 rupees, 850, 800 could be points where you can look to average further.
Right, this one is coming from Leon and he's asking about Tata Steel. He wants to know future of Tata Steel with respect to the Q4 results. He's holding about 3,800 shares at a price of 100 rupees per share. Sharmila, what's the prospect for Tata Steel going ahead? Brighter future?
I think so. If you already have the stock, I think definitely continue to hold. If you don't have the stock, then maybe you can wait and try and buy it at a dip. But overall, I think looking at where the steel cycle is and where Tata Steel is within that space, I am very positive on the stock, so I would continue to hold.
Kunal, Hitesh wants to know your outlook on gold because at the start of the year, we remember that you mentioned that gold could be the best bet for this particular year and see where gold prices are sitting right now. And Hitesh wants to know the good range to buy gold for the long term.
Well, I'm not sure of the good range, but my belief is that gold can probably head even higher from current levels. My sense is, that the dollar prices for gold has not yet shown signs of a confirmation of a breakout on the longer term basis. So once that happens, I believe gold in rupee terms can also, increase significantly from where it's trading right now. So I think you can buy at current levels in rupee terms. For example, if there is a 1,000-point dip or a correction, like what we saw, for example, in a few days back from 60,500, if I remember, gold had dropped down to, I think, 59,500, 400 levels. So, those are 100,000 odd point corrections which you can look to take advantage of and look to accumulate further.
Okay, this one is coming in from Sai. He is based out of Dubai and he has 17,000 shares of Manappuram Finance. purchase at 125 rupees per share. He wants a one-year view. Kunal, we know that there was a negative news that actually hit the sentiment when it comes to Manappuram Finance in yesterday's trading session. Even the company confirmed the Enforcement Directorate had conducted searches at various locations. On the back of that, you saw the stock plunge about 10% in yesterday's trading session. But given all of these factors in mind, how do the charts for Manappuram Finance look? Actually, when there is a negative news flow, does it make sense to look at the charts and take your call when you're investing or wanting to exit in a stock?
Well, that's the entire point, Cheryl, because in terms of news flows, we generally wait out for at least a week or for the prices to settle, because there will be a lot of confirmations, denials, etc., which could happen to the stock, and that could probably result into additional volatility or subsiding of volatility, depending on how the news flow shapes up. So it's very difficult to preempt and take a call that just because the stock has corrected 10%, 15%, that the news is digested into the stock price. So ideally, wait out for a scenario for, say, the next 1 week or so. If the stock prices settle into a trading range, the markets look attractive, and if the kind of negative news flow, if that abates significantly for Manappuram Finance, that's where you can look to start averaging out. As of now, I would just suggest to hold and maybe keep it under a wait and watch mode.
Okay, that's a hold coming in for Manappuram. But Kunal, once again, the question for you. Vivek is holding two counters. Firstly is BPCL from a price of 390 and IRCTC from a price of 780 rupees. Sitting at a loss in both of these names, but he can still hold them for the next 1 to 2 months. Your view?
I think you should average both of these names. In fact, IOC was one of the stock which I recommended in the morning. My sense is that the OMC packs are coming back into a very big breakout mode for themselves. So, as of now, the movement is very slow, gradual, but I believe eventually the pace should pick up for these OMC stocks. I'm bullish on the entire pack. I would recommend that, it's a good time where you can look to average. Even for IRCTC, that even though if you bought at higher levels, I think it's just recently that we've seen the railway stocks coming back into flavor. And it could be a matter of time that even IRCTC scales up and, manages to rise in a very similar kind of a fashion. So I would be bullish on both of these names, would suggest an average if possible.
All right, the next query that I have is coming in from Ramesh. He's writing to us from Delhi. He's asking which stock is better, Kunal, with a 4-month horizon, Adani Power or Tata Power?
I think we've been advising this consistently that Tata Power is a much better bet from the power names, and specifically from the two names which you've asked to compare. Tata Power is a stock which is relatively less volatile and more consistent with the price uptrend. Adani Power had a fantastic uptrend in 2021-22, but then after the spate of negative news flow, it's a lot more dicey in terms of the charts, in terms of the trends for Adani Power. So that's the only reason why I would suggest a skip on Adani Power. I would suggest go for Tata Power.
Okay, once again, Kunal, a query for you. Basap Datta Sarkar from Kolkata is holding 500 shares of M&M Financials, the stock we were discussing right at the top of the show, and his buy price is 260 rupees. Wants to know, is this a good time to book profits, or rather he should continue to hold on?
See, very interesting question, Srishti, because the last, 3 years, 4 years of charts indicate that whenever M&M Finance has gone into a breakout on the daily charts, so for example, something recently which happened, I think, in the month of February when the stock broke past about 240 levels, the stock climbed up, 10% quite, swiftly. The similar, chart and the breakout happened for the stock, I think 4-5 months before as well. So it has this tendency of giving a 10% approve above the previous breakout zone. The previous breakout for M&M Finance was around 270 mark. So if you do the math, I think closer to 300 levels is where I would expect the near-term targets to settle for M&M Finance. That could be a point where you may look to book out full profits.
Right, Kunal, looks like in the last leg of the show, only you will have to answer queries because we seem to have snapped the line with Sharmila. So let me take the next one for you, and this one is from for BEML. Ajay has written to us from Hyderabad. He's saying he's holding BEML and he's saying the stock has already done a 10% rally today. He's not mentioned his buy price to us. So what should he do? Exit or hold?
So I'm sensing that, since he's mentioned 10% up move, which means he's already sitting in profits. I think it's a good time to take out profits for BEML if you are a short-term investor or short-term trader rather. Maybe I think because at 1450 levels, where the previous high for BEML is in the month of February, that's where the stock may take a bit of a pause. So the closer you are towards that 1450 odd mark is a good zone to try and book out profits if you are a short-term trader.
Okay, Kunal, Subrata Mukherjee wants to know your outlook on Chambal Fertilizers, and is this a good time for a fresh entry in this one?
Yeah, in fact, we discussed this in the stock yesterday as well, Srishti, because the stock formed an inverted head and shoulder pattern. The breakout for this pattern was around 293 mark, and I was mentioning quite clearly yesterday as well that the stock closes about 293 levels. The stock could be termed as a strong breakout. Now, I would suggest a hold on Chambal Fertilizers from those levels. I think what you can now do is maybe keep 285 as a trailing stop loss and look to hold on to the trade. If you've not bought, then you can buy at current levels, but again, your stop losses would be very similar. On the upside, I would suggest target range of closer to 320, 340 for Chambal Fertilizers.
All right, so that's the take coming in on Chambal Fertilizers, and that indeed is the last stock that we're discussing today on Buy Now, Sell Now. Thank you so much, Kunal, as well as Sharmila, for joining us on the show, talking about NBFCs as well as sharing your stock recommendations with our viewers. But before we wind down on this edition of Buy Now, Sell Now, my colleague Sumit Chaturvedi spoke exclusively with Ajay Singh, who's the chairman and MD of SpiceJet, about the Go Air fallout, as well as where he sees the aviation sector headed from here on. Listen in to the exclusive conversation.
Any airline going down for whatever period of time is an unfortunate event. And in a country which is growing as rapidly as India, with the tourism sector growing as rapidly as India, we want, of course, airlines to be strong and viable. We wish Go Air all the best. This is a resolution process that they have entered, and we hope they resolve their problems and bounce back soon.
So about you are expanding in a big way. Yesterday you announced 25 more aircraft will be brought back to air. What about more expansion plans? Will you, in the light of one airline going down, definitely it's natural
This
that...
has nothing to do with one airline going down. The sector has been going up in every way. And these are aircraft that SpiceJet had, which are on the ground because of problems that we had during COVID. And those aircraft are now being revived with assistance that the government has provided through the ECLGS scheme. So hopefully we can bring them back quickly and connect several of the destinations, especially small towns and cities that have been left unconnected because of these aircraft being down.